Okay, so I
It's
said
not
that.
showing.
Eh?
It's showing now.
I said that you are the one that is not what's it called? You are the one not getting this very well. There's nothing like. My screen is still showing.
Yes, sir, it's still showing.
I said there's nothing like what's it called? Technical analysis or what do you even call it that time? There's this naughty theory that does not really exist. And you get YouTubers to go up and down, and you think what you know is more than what they are saying. Once you are doing top down analysis, is you analyze, you are able to analyze market. You know that this is what market is saying. This is what we call technical analysis. That different from analysis. That different from analysis. We have fundamental analysis. We have behavioral analysis. We have technical
So what do you call it?
analysis, and we have top down analysis. We have different ones like that, sha.
So please mention it again.
I said, I said we have technical analysis.
Mm-hmm.
I said we have behavioral analysis.
Do you what?
Behavior, the word behavior, behavior
Okay.
analysis. Then which other one did I say we have again? We have fundamental analysis. We have there's one other analysis we have again. About four like that. That type of analysis we have. Now, the one you are most concerned with is the fundamental analysis. Sorry, is the technical and fundamental analysis, which is very true. So the technical analysis is what you have been doing all this while. For you to read charts, to read charts, you have to see charts. I hope you can still see my screen, bar.
Yes, I can still see it.
So for you to read chart and know that price of market come here and is going up, it's what we call technical analysis. You are technically analyzing price action. That is, so there's no terms like difficult like this where YouTubers deceive you. This is you use other block to place a market. This is technical analysis. Was this Saturday or Sunday we had that class? The last one.
Yeah, it was Saturday.
Saturday, bar. I told you that
Yes, sir.
gold will still be bullish. That can buy gold
Yes,
and gold will continue
yes.
to buy. And price was here. It could not take out this high, right? I told you it's going to take out this high. For what reason? That is the technical analysis. So I'm predicting the price of gold for buy based on the fact of certain price actions or reactions I see in the market. That's technical analysis. So there's nothing special about technical analysis. Is
Okay.
that clear?
Yes, sir.
That is English for you. So basically, you were asking a question the last time. I could not answer it. Or what was it? Can you remind me? I don't know.
So I was asking about this buy side and set side liquidity and open and close market. How we can use it on, let's say, like all those daily time frame and 4 hours time frame also.
I think I explained buy side liquidity and sell side liquidity for you the last time before we ended the class.
Yeah, I told you that. Yes, yes, you did, but actually don't really understand it. And also, this one too that you said that you're going
This
to
example
tell
you
me.
see here is a buy side liquidity. I told you that when people sell market, for instance, and they put their stop loss at above, that above is where money is resting, and that is means a buy side liquidity.
Mm.
Like this instance of where with this place that we left market on Saturday, that we saw market on Saturday, that said that gold will take out that high, right?
And sir, please, are you recording it?
Am I recording it? Yes, I think so.
Okay, sir.
Yes, I think so. So this place, we said some people have sold from this place. Sure, you know, some people sold from this place. I hope you are seeing my
Yes.
cursor. And
Yes, sir.
when they sell here, they will put their stop loss above here. Is that not?
Yes.
That is a buy side liquidity. Buy side means that the market will buy up to take out that liquidity. That is what we mean by buy side liquidity. It will go up, it will buy up to take liquidity. When market sells down to take liquidity or take people's stop losses, it's what we call sell side liquidity. So just English. It's nothing special. So
And sir, please.
and those stop losses, they are found in major highs, like double top like this one, double top like this, or old highs and old lows, or sad lines for people that trade trend lines, like for people that want to take out trend line structures like this. Those are for trade trend line and expect price to move from buy side to this place, which is always true sometimes before they go up. So market can take those are liquidity. Those are liquidity, side row liquidity, all of them are like that. So I'm with you.
Um, Sir, please, can you help me to do this top-down analysis on this gold? Let me see, sir. And you also said something that you are going to tell me about trade origin and white cost, something like that.
No, at least I will teach you why call for. At least I will teach you why call. I said I will teach you trade origins. Yes, but I never said I will teach you why call.
And you also mentioned something like accumulation that day that you said you are going to tell me about accumulation, something like that. I write everything down here.
Medium. Okay. But anyways, we have said it several times. Where should I start from now?
So let's start from top-down analysis. I think that one that you said. Let me first know this one.
Top analysis. We've explained.
Yes, sir. On this gold, like let me see the way you are doing it, and you can tell me the rules of on it.
Okay, basically, I did tell you that most traders I check the highest time frame to know my bias for which I'll be taking. Let's say this month now. I already look at gold on monthly time frame, right? And I see that
Yes,
last month actually finished bullish, right? And
yes,
this strong bullish shows that there's willingness for markets to continue to push higher. Are you getting me?
yes, sir.
Now, that way, I already know that in this month of October, all I'm looking for in
Yes,
gold is just buy. I'm just looking for buying opportunities. Nothing concerned with sell. Even if I see sell, it will just be for a short period. But I know fully that if you take major trade, you should be on buy. Now, I'll come down to my weekly. Since I'm actually weekly also is not show it still show you direction for bullish continuously. Daily is still the same thing. So let's assume, okay, what's time now? Good, market has not closed today. Now today's trade will close. Okay, now let me use yesterday's something to explain something for you. Now, I said yesterday is what, Monday, ba? Can you hear me?
Yes, sir, I can hear you, sir. I can hear you. I mute myself because of the noise here. I'm
Okay,
in the office.
okay. So now look at this market, this daily time frame. This is a day candle, right? That's yesterday candle, bullish. Now, what I would do is take my Fibonacci tool, mark the high of the candle to the low of the candle. Okay, okay. Before then, let me just continue. Now, within this region, here, this one has even created the daily fair value gap for you. Market will come back later in the future to come and pick entry, either to invalidate it to turn to inverted fair value gap, or it may not even invalidate it because we have another block here. So it may come tap into it later in the future, the market will go up. So now I come down to my possible 2 hours time frame and hunt out for opportunities within that period. If I didn't see anything, I want to now we're already seeing the prices already, but I want to assume that we didn't see anything. Let me say, sorry, 1 minute. Anyway, I was trying to cover up this, but since it will not cover unless if I once I move my hand, let me just take it off. Now, since I already know that gold is bullish, bruh. Let me. I hope you can hear me. Yes.
Yes, sir, I can hear you, sir.
Okay. Come. Good. So Monday actually ended in this vertical line here, right? Now, as Monday has ended here, now I take the range from the day of Monday to the high of that Monday.
Sir, please, where did it end? I'm not seeing it.
This vertical line I drew now, this vertical line, this vertical
Okay.
line, that's where that's that's where it ended. You can see here it's right Tuesday 00 hour.
Sir, how do
That
you know? How do you know that it ended, sir?
you see the time now. You see the time on that for your time frame on your
Okay. Yes, yes, I can see it.
see Tuesday 00 hour. That means the day just began at this point. So that means
Okay.
market eventually ended at here. So now I can go as low as my 15 minutes time frame. I already have a bias that gold is going up. Let me go beyond my higher time frames. Right now, look at within this range. We have premium and discount, right?
Yes, sir.
Normally, we already said that at premium or at premium, you do what? You sell, right?
We sell. Yes, sir.
While on discount,
We buy.
good. Now look at structure of what the market did for you on you check 15 minutes time frame here. As market actually is on this premium, what happened? This is the above. Market sold down, right?
Yes.
But this selling did not reach into the discounted level. I hope you know
Yes, it didn't.
it didn't reach the discounted level. Of course,
Yes.
is there trade opportunity? Depends now on your what's it called? On your knowledge, your level of knowledge. For me, I've seen some certain things here. Remember, before I skip that one, number one, this is a minor FVG here with an other block. This is an other block here with a minor FVG here. I hope you can see that.
Seeing it, sir.
Eh? Can you see this fair value gap here?
It, yes.
You see it, bar? So
Yes.
my network is the worst. But this is a fair value gap that happens after, okay, after a break of structure of the high. Because this is market creating a break of structure here. I hope you know. After
Yes,
market
sir.
has created a break of structure, this is a fair value gap, right? And
Yes.
remember your buy model, right?
Yes, sir.
If you don't remember, go back to the buy model video. That when market creates a break of structure, you expect a fair value gap to be left behind. The market will come back to fill. I hope you remember.
Yes.
Good. So price came back here.
Yes.
This is where I'll be short looking out for my market now if I want to buy here from this point. So then second confirmation is that in fair value gap, we want to see that market is rejected there, that the price actually show rejection, like price did not it didn't break through the fair value gap. Because if it breaks through the fair value gap, it will turn to an inverted fair value gap, which you use to trade rejection.
Okay.
You there?
Yes, yes, sir. Yes, sir. It's true.
Good,
Market will break it and tip out.
good. So now, second confirmation. Remember the three pattern trading pattern I told you about.
Yes, sir.
Did you see it here?
Swing.
A swing low.
Yeah.
One.
Swing low. Yeah, I saw the swing low. Yeah.
Did you see it? So you enter the third candle. At the close of the third candle, put your stop loss below it, below the fair value gap or the nearest fair value gap. This will have given you a good move. Rather than the one you were gambling, I would say you were playing on 1 minute time frame and you were happy with that kind of amount of. Anyways, profit is profit, no doubt, but still, that market was a gambling market where you have
Okay.
look at number of positions you entered. It's too much. Pick one quality trade over quantity. It will help your trading psychology. Yes, I know that there are opportunities on 1 minute time frame very well. We will quickly see entries on 1 minute time frame. I trade 1 minute time frame, no doubt, right? But still, I'm still the one mentoring you. So let
yes, sir.
me don't even if you want to do like I'm doing, at least learn it very well first. If I'm trading on 1 minute time frame, I don't gamble. That lot size you use, I can't be joking with that small amount of money. It's a good one, but it's not good you use big lot size too. So we tried. And I wonder why you are too greedy too.
Say
Greed want to finish
accounting,
you.
sir.
What?
So
What
good, but what loss size do you think is good for gold and stop loss?
for
What,
now? For now,
what do you think might
stick
be?
with your minimum lot size. Use 0.001. 0.01, I mean 0.001.
Okay. Yes, know how to calculate Bitcoin because
Use your minimum lot size. Gold is not
size take
you said?
many calculation like how many percent can I risk on my account?
Anyway, risk we are diving into risk management now, or we are still on analysis? Which one are we doing? Because risk management is a different
No,
concept
okay,
altogether.
no, sir. Sorry, sir. Sorry. No, sir. No, sir.
So for top-down analysis, so I stopped on 15 minutes time frame. My entry, even though I see entry here, but 5 minutes time frame will show it very, very clearer. I use 5 minutes time frame to pick entry mostly. So you can see this.
A question. I want to ask a question, sir.
Okay.
Sir, when you are doing your top-down analysis, is it that you are going to put those short and those long distance tools on it directly from the top-down and from the higher time frame, or you are going to put it on that 15-minute time frame, sir?
But the one I've been doing for now, what is I was doing, even though there are things I would not mark out based on fact of my knowledge, but basically on higher time frame you can mark out your bias first. So you get, like,
Yes, sir.
let me delete everything I have on my chart. Let's do something. Now, if I go based on my bias, what most people do on that time frame, which I believe we have outgrown. That's why I did not bother to map out some things. For now, like now, here now, we're going to, okay, mark out for, they will begin to go like you have recent break of structures,
Yes, sir.
begin to mark out break of structures, break of structures to the upside. This is also a break, even though. Now, after this break of structures, then they begin to 2 hours time frame. They begin to arrange it to see if it's actually valid. You can see that it looks more bigger here, right?
Yes, sir.
It's more bigger than break of structure. Then they begin to look out for any other thing. Some people they look out for, but me I just teach you how I do my own. Once I check daily time frame bias and I see what happened there, I check 2 hours and 1 hour. I see what happened there. My drawings is what I want to do is a 15 minutes time frame and 5 minutes time frame, because I don't want to confuse myself so much. I just want to get the nail on the head, and we get rolling. You can sit on chat all day and you will not see anything to pick on the chat. It look as if you are not seeing any information you want to mark. You get.
Yes, sir.
But if you want to filter out noise, basically, okay, for instance now, what do you want to look out for in trades before you make trades? Because now you have learned other block, you have not fair value gap, you have learned mitigation block, all of those rubbish. But the thing is, you now need to pick the one that you have trained yourself. You have to train yourself on one major one you'll be using. Even if that one failed you several times, as in, not let me not say several times, even if it fails you in some cases, right? You still know
Yes,
that
sir.
this is what works for me and this is what I want to stick to. That's how you build strategy. I have my friend Jeremiah, you know Jerry, right?
Yes, sir.
Jeremiah don't use fair value gap to trade. He uses the other block to trade. But me, I prefer fair value gap to trade. It is what he has practiced, that he know that it works for him. So you can say that, okay, what I'm going to be using to trade is mitigation block or exhaustion block. This is what I want to see in the market before I take my trade, because that also helps me maintain discipline. Market will keep forming structures every now and then, but what do you want to see in that structure that will make you to pick trade is what you need to go and mark. I cannot tell you that one 100%. because everybody has what model works for them. But I've taught you how to identify those models. So you stick to the one you feel like. Some people laziness will not let them to look out for fair value gap. Some people laziness will feel like other block is too complex. Let me just use this strategy. Like, are you following what I'm saying?
Yes, sir. Yes, sir.
So pick any of them that you feel like okay, all of them works, but they cannot work 100%. Looking for what works 100% is a lie. There's what we call model failure crisis, because this market is is a financial market. And financial market is not like other type of engineering where you have it's not like physics where you state a law and you expect that the law says to maintain constant k forever. That's why I say we have what is called behavioral analysis, because the market reacts based on news, impact, and behavior of people. Are you getting what I'm saying?
Yes, sir.
So if a model does not fail, others will not fail too. There are models have to fail to an extent. It's finance. People are greedy. People are confused. So a lot of factors. People are scared. A lot of factors contribute to the financial market. So that is that. Then what else? The accumulation and the likes. I've explained it for you before. I don't know why you're not paying attention. When markets want to start, okay, there are three phases of market. Or we were told that you have a ranging market, you have what's it called? Bullish market, buy and sell, right?
Yes.
Now, accumulation and distribution has to do with the fact that markets might begin to accumulate orders, like doing small consolidations. That is accumulation. Then after an accumulation phase, markets may do what is called a manipulation, which is called manipulation, which is fails as do it as if it's going down. Meanwhile, the original position it wants to go up. So after it come down a bit, it will now go to the original direction. It happens every day in the market. In most cases, just go and study your chart. When market opens for the day, the direction it starts with for that day, in most cases, 70% of the time, market will close in opposite direction for that day. Did you hear what I said?
Sir, in what opposite?
Said,
How, sir? How? I don't understand the place you said it's going to close in
for instance, if market opens
opposite
today,
direction.
if market opens and is selling, right? In Asian session, we say it's
Yes.
accumulation and it ranges, market ranges for a while, right? After market ranges, it now sell small, right? This selling, many people will sell the
Mm.
market, but that is this selling down is all called manipulation. Market will now go up, it will now buy up. That's how you see some trade, like it will be as if it's going your direction first, later it will now go against you. That is manipulation and distribution that just happened there. Let me use gold today's market. If you go back to 5 minutes time frame or 15 minutes time frame, just hold on. Oh, my network is a bit slow here. I don't know. My something is not loading here. Get my network is a bit really hanging there. So what I'm trying to say about, if you check your chart today, that place that I mark my entry of fair value gap, maybe you can go back to once I started the video recording.
Yes.
If you check your chart, you see that place, you see that market first, okay, at that premium, market first sell down, right? Okay, I think it has opened now. Now let's go back. Let's refresh it. Now, did you see what happened to this market? What did market do? When market opened at this place, right? 0 hour. Now, you see where market open, right? Are you following?
Yes, I'm following you, sir.
Okay, now, so as market opens, what did market do? Market first sell down. Is that not? Buy up again and sell
Yes.
again. Now, this selling now, see that some people have sold here now, thinking they're already making profits. Sometimes sef, some people who are midnight trader, they will have just placed trade and they will just go and sleep, only to wake up today and see that price has gone against them and take them out. Do you see that?
Yes, sir.
Sometimes it might just be manipulation, then distribution. Sometimes it will be. It's called AMD, accumulation, manipulation, and distribution in market. I've taught it in those videos. Go back, go back and
AMP.
go back and watch those
AMP.
AMD. Go back and watch those
Sir,
videos.
it's not there. Oh. I've watched everything.
I said it
Sir, it's
inside
not there like
video.
manipulation, distribution.
And accumulation, manipulation, and distribution. I didn't treat it as a whole topic, but I treat it inside one of those works. Possible buy models, sell models, or any of those
Okay,
ones. I did it as a topic. I treat it inside any of those models.
okay, sir.
So any other question?
And sir, please, yes, sir. Do you know,
We have
sir,
some
ẹ
time.
mọ kíní tẹ máa ń gbé sórí,
Okay.
ẹ mọ kíní tẹ máa ń gbé sórí screen báyìí tó jẹ́ pé ibẹ̀ yẹn la máa ti set stop loss wá sí ibẹ̀ yẹn, like it will look like these tools that we usually use for selling and buying. These tools.
This one. Is it this one?
Yes, this one that is at the left.
What I'm drawing now. What happened to it?
I want to ask that do you put directly on higher time frame or on 15-minute time frame for the entry?
Okay. You anywhere you put it, it will show on all time frame now. If my entry is on 15 minutes time frame, I put it on 15 minutes time frame. For instance now, if I've marked out my fair value gap, like let's assume Holy Spirit, what is this? I'm looking for something. Now let's assume this I've marked out this other block with my fair value gap at this point, right? This fair value gap. Network. Okay, so let's assume I've marked out this my fair value gap, right? I mark it out to this point. Okay, can you hear me?
Yes.
So
Yes, I
what?
can hear you, sir.
Yes, my network is not stable. That's why the tool is not showing. So what I'll do is I'll just place the tool at this point. That point where I place it, okay, it's back. Okay. So assume I've marked out my point like this FVG to other block together here. So are you getting now? So if I'm using the three candle pattern formation
I
method,
can't I can't see the two cell.
you can't see
I
my
can't
screen.
see where you mark.
You are not
I
seeing.
can't see where you mark the fair value
This
gaps.
is the fair value gap
Okay,
now.
I can see it now.
Can you see
Okay.
it with the other block here?
Yes.
Exactly. So if I've marked that out, so if my entering is that fair value gap, I put it at this point here. Whichever place I feel like putting, maybe I want to put it here. I put it here. That means that this place becomes my entry and this place becomes my stop loss.
So where will be your stop loss, sir?
This place now, where that red stop, that's where I put my stop loss now. The number at that
Stop.
place.
Okay. Okay. Okay.
And
Wow.
where this the end of this green, that means that's my TP. So that's what it's saying. Is that clear? Hello? Hello?
Hello, sir.
You said what?
Choose the red line the below is above like here ni be fair value gap yìí.
Also, that is allowance now. The difference between this red, this green, the space between this green, this red,
Mm.
uh, to this place. Sorry. Can you see my screen? Can you see my screen? Hello?
Yes, I can see it.
So the difference between this
Yes,
place
sir.
and this place is what is called the risk allowance now.
Hello, sir. I can see your screen.
The difference between this place and this place is what called the risk allowance. That's how much you are willing to risk in the market. Or you don't want to risk anything in the market. Did you hear me?
Is entry
You said?
and stop loss. No, I'm writing it down. Is called risk.
Alright now, so let's call it a day by this time.
Allowance. Okay.
So just go and practice your sharp
Thank you very much, sir.
and make more money.
Sir, please can you send me the video, sir, please?
I will compress it and try and send.